Hey, good morning, everyone. Happy Tuesday, September 26th. You might be surprised with the setting that I'm in right now because I was supposed to be in Europe. That's why I was away yesterday trying to figure out what is happening. So I will actually now be back in Europe on Friday. So hope everyone's doing well. Let's do this week. Let's see what we got in terms of updates. There's a lot to talk about here as the markets continue to slump, and the CNN's coveted fear and greed index is now at 34, which is fear. Anything under 25, we get to extreme fear. So very interesting. A lot of people are still very bearish on this market, and we'll break down what I have in terms of thoughts for the current session, the breakdown of the current session, and more. So why don't we take a look at what we got going on? First things first, right? Credit agency. Last time we had Fitch's credit agency that downgraded the US government debt, right? And now Moody's, another rating agency, is weighing in on the standoff between the US over federal spending, saying that the government shutdown would create negative credit for the country's sovereign rating. So while a short-lived shutdown would unlikely to be disruptive to the economy, it would underscore the weakness of the US governance. So Moody has cautioned, highlighting that the risks of intensified political polarization. So recall that Fitch had cut its ratings on the US to reflect a growth, debt burden, and governance issues, and a majority of the most recent downside can't necessarily be attributed to this or any specific event, I would say, but this would realistically, if we do get a government shutdown, contribute to some more of that downside pressure, and so would the shutdown in itself, right? We also have the United Auto Workers strike, which is tying into all this economic tension right now against Detroit automakers. Ford has continued along with GM, Stellantis, blah, blah. So Ford has actually halted construction of its $3.5 billion electric vehicle battery plant in Marshall, Michigan, and we're pausing work and limiting spending on construction on the Marshall project until we're confident about our ability to competitively operate the plant. This is what a spokesperson said. So over the weekend, Ford warned that there were still significant, wow, sorry, that there were still significant gaps in the talks with the UAW. We believe that the UAW strike and ensuing pay raise is capable of driving Ford's stock down as much as 10%. This is what an investment group leader, Livy Investment Research, said, adding that the wage hikes could drive a $6 billion wipeout of Ford's market cap itself. So very interesting in that case. One more economic event here that we have. We have the JP Morgan, right? The GPM caller that is coming out, right? The put call caller that everyone's going to be focused on into the end of the month here as we wrap up this quarter, which a lot of people focus a lot on, and they try to understand exactly what it is and what it reflects, but it is a difficult concept and all to grasp. But we also have the Federal Reserve. Remember last week we talked about the meeting itself, right? The current pause in rate hikes and what that would look like and where would that lead. So according to CEO Jamie Dimon from JP Morgan, the world isn't ready for the Fed's benchmark interest rate to rise to 7%, right? This is what they've been talking about, adding that it could get worse in the case with stagflation. If they're going to have to lower volumes and higher rates, there will be a stress in the system. This is what he said. Dimon also called on clients to be prepared, saying Warren Buffett says you find out who is swimming naked when the tide goes down, and that tide is going to go down. So his comments contrast the wider consensus that the Fed is nearing the end of the tightening cycle, with the FOMC dot plot only projecting one more rate hike in the cards. But we also seen the projections in the rate hikes or in the rate changes over the next 2 years to have increased just ever so slightly. So when we look at this, right, we also have some AI news before we talk about this overall market that has been slumping from this 65 currently as it stands on the S&P 500 futures. So the AI front, right? It's been revolutionary for quite some time now, and it continues to evolve and commercialize and so on and so forth. So Spotify actually is the latest company to utilize OpenAI's newly released voice generation technology in the hope of attracting new users, audiences, and revenue. So prior artificial intelligence efforts at Spotify centered more around personalization technology like AI DJ, but the new voice cloning feature can go to impact many industries and bring down barriers of the spoken word on an international scale. So generally how it works, right? Podcasts are originally recorded in English and will be available in other languages, depending on what it is, while keeping the speaker's distinctive speech characteristics while the project still is in the pilot phase. So the new tech is capable of crafting realistic synthetic voices just a few seconds of real speech right now, as you might have seen on YouTube and whatnot. Someone speaks in English and it goes into French, German, right? Different things, but it doesn't last very long. So episodes are currently available for podcasters, including Kristen Bell, Lex Friedman, Stephen Bartlett, and AI-powered voice translations of the Spanish, French, German will be added soon, as well as more episodes with podcasters Bill Simmons, Dax Shepard, right, so on and so forth, Trevor Noah, and blah, blah, blah. So by matching the creator's own voice transition gives listeners around the world the power to discover and be inspired by new podcasters in a more authentic way than ever before, right? So we believe that a thoughtful approach to AI can help build connections between listeners and creators, a key component of Spotify's mission to unlock the potential of human creativity, which is something that Spotify's VP of Personalization, Zlad Sultan, had mentioned. So the announcement coincides with several big developments, including Amazon investing up to $4 billion in AI startup Anthropic, Getty launching a generative AI tool for images, Microsoft OpenAI outlining that ChatGPT can now see, hear, and speak. And the latter even referenced the collaboration with Spotify. So Spotify, another tech name to enter the sphere of AI here and pressing onward and upward, which is going to be fairly interesting to see. Let's consider what we got in the overall equity market. Yesterday, pre-market, we traded down into the 3440 in the S&P 500 futures, right? That caused a pop into the 80 by the end of the day. And I was looking for some of that continuation overnight, right? I think that this has the making for a potential dead cat bounce that could bring us a little higher, right? 4400, 4420s into that region. But right now, the downside pressure, much like yesterday, is coming out as we come back in towards that 4340, which is a region that starts a large distribution block to the downside. So I think that we are fairly overextended to the downside, but it is very difficult for a bid to be caught in this market. I think that this, again, turns into a slight little bounce that can offer some upside potential, not anything crazy, but it's gonna, in my opinion, gonna be fairly difficult to break through that 4340 to the downside. And if we do, there's a fairly quick 40-point drop after that. I think that the market still has a decent room to the downside, but you're going to have to, in my opinion, see some new stronger handed sellers coming in rather than people selling into the lows and expecting another 5% move to the downside. So I'll be watching to see if they hold that 40 today and what comes of this, right? But they're going to have to get active fairly soon because we're already day 2 of the week and we're losing time for the bulls to take this over before that next bearish momentum drop comes out, which is more likely than not at this point. Have we seen lows? Probably not realistically. We saw a new low yesterday pre-market actually form. We're very close to one as I currently speak right now. So things to consider as we get going. And what we're going to do is open up our live trading room with you guys. Yesterday we had an amazing day in the live trading room. You know, I wasn't there. I was there in the later afternoon, let's say. And we'll be doing that live. So check us out at community.tradeproacademy.com and also go to tradeproacademy.com for our free futures course that outlines a lot of what we do. So I'll see you guys there. Thank you. Take care, and we'll chat soon.